next question that is coming in is from Hyderabad. This is PNV Rao. He says he wants a few stock suggestions that he can buy and he can forget. Buy and forget, I doubt you can really do that in this market. But Rajesh, a couple of perhaps stronger, fundamentally strong names that PV and Rao can hold for the next 1 to 2 years.
Good morning, Kanishka. Good morning, Ankita. Good morning, Kunal. It's good to see you after so long period of leave. As far as long-term bets, fundamentally, some stocks are there that one can hold for pretty long period of time, maybe 4 or 5 years, or even some of the names, maybe the Reliance industry, which one can pretty well buy and forget at that point of time. UFC Bank, ITC, Larsen. These are some of the names, even Bajaj Auto. These are some of the names which I can suggest at this point of time. Despite the near-term volatility, these stocks are going to give decent returns, I would say, in a longer period time horizon. They all are fundamentally very strong and are capable of at least less risky, I would say, considering the mid caps. So it's better to hold these stocks for a long period of time, and I think at least 12 to 15% kind of CAGR return would be
Rajesh,
there.
I think your audio. Rajesh, I think your audio is a little patchy. I think we got Reliance and Bajaj Auto there, but we'll connect with you in just a bit. And for now, we'll take a very short breather. Be right back with more of your queries to be answered on the other side. Hi there, welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena, a show where we are taking all your stock-specific queries with our experts. We have Kunal and Rajesh with us for all the queries. So let's get back then. Now this query is coming from Radha Krishna, who's written to us from Bangalore. Kunal, he wants to know, he's a senior citizen, and he wants to know whether or not it's a good time to put their money in Suzlon Energy. They have an investment time horizon of 6 months. What would you suggest?
Avoid, on two criteria. One is the age criteria which you have and the time frame which you're looking out for, and then the beta of the stock price. I think both of them are completely a different mismatch. The stock price is extremely volatile. We've also seen that the stock has been going through a downward drift over the last 4 or 5 months. 72, 75, I think was the recent high for Suzlon, and the stock has corrected from those levels towards 58, 59. There is a lack of volumes for the stock price in that aspect. So I would suggest to avoid the stock in that prospect. And if you're looking to even invest or even build your portfolio from a medium to long term play, then I would suggest something like Bajaj Finance at current levels. Yes, the stock has rallied in the last 3 to 4 weeks, but then I think it looks to be more formidable name, even if it becomes a part of your core portfolio. So I would recommend that kind of a switch from Suzlon to Bajaj Finance.
All right, switch is what is recommended from Suzlon to Bajaj Finance. That's the question for Radha Krishnan. But let's move on to the next question that's coming in from Padmanabhan, who's writing in from Kerala. He says he has 1,250 shares of Tilak Nagar Industries. Now, he has not written the buying price. He wants to know the prospect for the stock for the next 1 year. Rajesh, let me come to you for this. Tilak Nagar Industries for the next 1 year.
One can continue to hold. The fundamentals have been strong. IMFL as a business is doing very well. Alpha as an industry is also doing very well. They have recently taken a new brand, and that's going to add to the margins going forward. Like the brand portfolio is expanding. It's a hold from buy side. And by any chance it falls to around 420, 430 odd levels, that would be a great buy.
Okay, so a whole call there, Tilak Nagar Industries. But moving on to the next query then, this is Rajesh writing from Bengaluru. They want to invest 2.5 lakh rupees. Rajesh, if you could suggest any 2 to 3 stocks from a long-term perspective, they want to put in 2.25 lakh rupees.
Go for 5 stocks, I would say. Allocate your money in 5 different stocks. That is 2.5 if you have 50,000 each in Reliance, Larsen, ITC, Bajaj Auto, and Cipla.
All right. Those were a couple of names, name suggestions from Rajesh. But let's move on to the next counter. This is coming in from Sangeeta, writing in from Pune. She says she has signed, she has KPIT Tech and Wipro. Which is a better bet for the longer period of time? Kunal, let me come to you for this question. Now, you've already spoken about the IT pack, Wipro, of course, from the IT pack, KPIT Tech, Cyient. But tell us, out of these three, is there a better bet for the next 1 year, or do you suggest staying out of this pack?
No, I think if you're looking at this from a long-term play, then I would believe that, say, over the next 1 to 3 months, there could be better levels which could be seen into these stocks, and then I think it becomes a good space to try and build your portfolios from a longer-term perspective. And I think all three of the names, Cyient, KPIT Tech, Wipro, I think all three of these stocks over the last 5 years, 10 years, I think they've done remarkably well. Cyient particularly, I think from 2,400, which was the high, the stock has come back to almost, I think, more than a 50% correction at sub 1200 mark where it's trading right now. KPIT Tech has also gone through a grind as well as a correction. Wipro has been an underperformer. So I think in terms of price levels, it could be a good starting point. But as I was mentioning earlier, that my sense is that over the next 1 or 3 months at least, you might see better levels which could originate for many of these mid cap and large cap IT names if you're looking to invest from a long term. So I think in that sense, you may look to start buying at current levels, maybe 1/3 of your expected quantity, and then the balance 2/3, I would suggest buy on dips as in how they come over the next 1 to 3 months at least.
Okay, so that's the view on that mid-cap IT space. But moving on, the next query is coming from Satya. Their query is on Karnataka Bank. They say that they have been sitting with a loss of about 15 to 17% for the past few months on this stock. So, Kunal, what would you advise? Should they switch or average?
So that's the switch from Karnataka Bank. Now there are two options which you can look out for if you want to stick to, say, a formidable PSU banking name. Then I think SBI fits the bill, quite aptly in that category. The stock very recently also, I think around the 820, 830 mark, the stock has given a good breakout on the short-term charts. So my expectation is that the stock should at least move back towards that 900 levels or closer to that kind of a mark over the very near term. And of course, even from a long-term play, SBI I think is a quality stock, without any doubt. And I think on the other hand, if you're looking at a slight high beta, stock within the PSU bank, I would look at or I would suggest even Bank of Maharashtra. I think that's a chart which has been showing a lot of promise over the last many quarters. Even though the recent correction has put the stock into a decent risk-reward play, but I believe that from a longer-term perspective, this stock can also offer a decent, positive return over the long term. So I think these are the two options which you can consider. Again, the choice has to be depending on your time frame, the risk appetite which you're looking at.
All right, with that, it's time for a quick breather. Don't go anywhere. After the break, we'll keep getting your questions answered. Keep writing into us. We'll be back with your questions getting answered. Stay tuned. Welcome back. You're tuned into Buy Now Sell Now, where we're getting all your stock-specific questions answered. And now we're joined by a live caller. Nishi is joining us right now. Nishi, hi. Thank you so much for calling us. Tell us, what's your question?
Hello.
Hi, Nishi. We can hear you. Please go ahead. Ask your question.
Yeah, I have Maruti 25 shares at 1316. So I want to know that what target I should expect or I should hold. I'm holding it for a long time, from 2010 or so.
Interesting question to be asking about Maruti, because Maruti touched its 52-week high today. In fact, the kind of delivery numbers, auto sales numbers that we are getting today, right a day after the GST rate rationalization, it's the entire auto pack is buzzing on top of that, especially Maruti, that's given some stellar response. They're saying that they haven't seen this kind of response in the last 35 years. The deliveries have already touched 30,000 and they have received some 70,000 odd bookings. So that's looking good on that front. But let me come to you firstly, Rajesh, and then I'll come to Kunal as well on the tech check. Rajesh, fundamentally, how's Maruti looking to you? And then I'll come to Kunal.
See, it's a very strong company, no doubt on that. Market leader in passenger vehicles, dominant market share, the largest car maker in India, aggressive push into EV and all, and are doing very well. The new models have been taken very well, and the kind of numbers that has been given yesterday, both by Maruti and Hyundai, itself show the kind of demand there it is in the market. And with the kind of GST rationalization and all, I think things are going to improve going forward. So it's a buy from our side, even after this kind of stellar run up the stock has shown, both of them at in the last few days. It's still a buy from our side for a medium to long term horizon. Maybe in the short term, there might be some amount of consolidation, but they are very good stock for long term holdings.
Kunal, do you concur despite the run-up that Maruti has seen? It's been a clear outperformer, but since it's sitting at its 52-week high and also Nishi has already made considerable profit, do you suggest profit booking and perhaps buying on dips, or what would be your strategy for Maruti?
Yeah, I would suggest a little bit of profit booking, but that doesn't indicate that I'm bearish on the stock. But it's just that many a times when themes become the talk of the town, it's always better that you start looking at booking out profits, and especially at a point where you've gained significant advantage in terms of your buy price, and you've managed to ride the major part of the trend. I also believe that there could be a possibility that over the next 2-3 months, once these stocks go into a patch of consolidation, there could be a potential new highs which could start off for many of these names. So I think that prospect, I would suggest that maybe start to look to book some profits over here. And in case if these stocks provide a dip of say 5% broadly from their swing highs, then I think that could be a good opportunity where you may look to nibble into the stock prices again.
Okay, so that's the view on Maruti. Hope, Nishi, your query was answered. Thank you so much for joining us today. But Kunal, do you hold the same view about booking profits for Hyundai as well? Rema is writing to us from Kerala. She has 230 shares of Hyundai Motors at a price of 2,560 rupees. She wants to know whether she should book profits or continue to hold for a longer period of time. And also, she would like to know about Solar Industries. She's been holding 37 shares at a price of 14,235. So quite a high price. What do you think should be done here?
I think for both the stocks, I would suggest to book some profits, and I'll so on the charts over the last 2-3 days, there is a sense that at 2800 mark, 2800, 2820 levels for Hyundai, there is some sort of a resistance which is creeping into the stock price, and the indicators for the first time I think it's shown some bit of a overbought territories for Hyundai on the charts. So that could probably be an indicator that we may be looking at a mild corrective phase which could come back into the stock. Even for Solar Industries now, even though I don't track the stock very regularly, but then just looking at the charts preliminary, the stock prices are showing the first sign of a major divergence which has come back in the monthly and the quarterly charts. Now, even though over the last, I think 8-10 quarters or so, the stock has been doing exceptionally well, but then when you see divergences coming back into the indicators on the price charts, the stocks gradually form a major top for themselves and then go into a phase of a correction. Now, since it's happened on the monthly and the quarterly charts, it makes a lot of sense to start booking out profits over here or trimming positions over here, and then wait out for those sharp corrective phases where you can look to dabble into the stock prices again.
All right, so that's the view coming in on Solar Industries and Hyundai. Let's move on to the next question that's coming in. This is Ignatius, who's writing from Kolkata. He says he says that stalwarts like Sharmila and Kunal are such positive influence, and of course he's praising the show. Thank you so much. Ignatius is a very regular writer and a caller on our show. Thank you so much, Ignatius, for being a regular viewer. He says he wants to invest on in Eternal. Also, he had invested earlier. He booked his profits. Now he wants to know what are the good levels to get into the stock. Also, he wants to know about the long-term bet, 2-year horizon. He wants to invest 1 lakh rupees in the stock. Kunal, I'll come to you first for the levels to enter, and then for the fundamentals for the longer period of time, I'll come to Rajesh. Eternal is already, Kunal, hovering around its 52-week high. Is this really a good time to get into the stock or wait for the dips?
I would suggest to wait for dips. The stock has been just about trying to make new highs on a regular basis, but then every time or every attempt the stock makes a new high, there is some sort of a divergence which has come across on the indicators for the stock price. Yes, from 320 the stock has slowly and gradually moved towards the 340 mark, but it's been more of a labored move for the stock on the way up. So which means that there could be a possibility that the stock may at least drift down to that 320 mark, which could be a good starting point if you're looking to trade, accumulate, or invest into the stock from a medium to long term horizon.
All right, so that's the tech check on Eternal. But Rajesh, let me come to you for the fundamental. For the next 2 years, he wants to invest 1 lakh rupees. Good bet. At least the competitive intensity that was a concern for this entire quick commerce space that has started now ebbing away. So, on fundamentals, does Eternal look lucrative to you?
See, the company is expanding, no doubt, on the dark stores and all. The last 2 quarters, we have seen the numbers taking a hit just because of the fact that they have aggressively gone on expanding the dark stores. At this point of time, with the kind of management commentary which we have seen in the last 2 quarters, we believe that the dark stores expansion, especially in tier 2, tier 3 cities, are going to be there for some more time and that are going to take a toll on the numbers. The numbers have been improving in the quick commerce space, but the competition is rising from likes of Geomart and Jepto and others. And at this point of time, the valuations are quite stretched, trading at very high fees of 3 digits. I think it's best avoided at this point of time. Maybe some amount of correction can be a good time to enter, but at this point of time, it's an avoid.
All right, so that's the tech and fundamental view on Eternal. But on that note, we'll take a very short break. Be right back with more of your queries to be answered on the other side. Hi there, welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena. You've joined us live from the SBI Live studios, and this is a show where we're taking all your stock-specific queries with our experts. So let's get resumed then. Kunal, this query is coming for you specially. This is Ghosh Dada writing in from Delhi. He wants your view on Bharat Forge. Now, what do you think? Is it a good time to, enter into Bharat Forge at the current levels?
This is a very interesting question because this comes at a point where Bharat Forge was one of the few stocks which was affected, because of the ongoing concerns between India and US with respect to the tariff. So I think in that sense, yes, the stock has gone through a sharp correction. But over the short-term charts, I was looking at it. The Bharat Forge is coming back closer to its 200 moving average. There is a potential breakout which could be in line for the stock price, and if that happens, that could reverse a major phenomena of an underperformance from a formidable stock like Bharat Forge. It's been a compounding stock over the last decade, very consistent in terms of the price charts. I would actually believe that this could be a good opportunity where you may look to invest into Bharat Forge. The only concern, as I said, is the news flow surrounding the two major economies. So I think that could be the only overhang for the stock price. But I think purely in terms of the chart patterns, I would probably believe that at current levels of 1250, 1260 thereabouts, Bharat Forge could be considered to be a good buy from a longer term time horizon.
Okay, so it's a good buy from a longer time horizon. But moving on to the next query then, Rajesh, let me come to you. This is Manoj writing from Mumbai. He wants your view on Edelweiss. He has 300 shares at a price of 175. He's asking what's the road ahead. So what do you think are the fundamentals like for Edelweiss?
Looks very good. They are moving into new models, AMC business and other things, funded new persons. Going forward, the prospects are very good. I think in the medium term, it can touch to around 125 odd rupees, but for a longer term horizon, considering the fact that the kind of business model transformation this company is doing, it can gain much more than that. So it's a hold from our side.
All right, so a whole call coming for Edelweiss. But moving on to the next query then, this is Prathamesh again writing from Mumbai. Kunal, this query is for you. He's been holding 200 shares of AB Capital at a price of 255 rupees. He wants to know whether he should continue to hold or book profits. And if you advise holding, then he can hold for a period of about 6 months. So what would you suggest?
See, I think the stock is coming to a point where just below the 300 levels, it's taking a pause. There is some selling pressure which is originating at the 300 levels. So I'm not sure how much time the stock will take to try and clear past about the 300 levels. It could grind through for say another 2-3 months or even 4-5 months. at those levels. So it really depends, on the time horizon, the willingness to hold on to the stock from a long term. Since you specifically asked for a 6 months kind of a time horizon at max, I would believe that say closer to the 300 mark to 90 short levels, I think is where you can look to book profits and then wait out for a point where, in case if the stock drifts down lower, you can look to buy back.
All right, so that's the view on AB Capital. But moving on to the next query, then this is Avasthi writing from Kerala. Again, Kunal, a query coming for you. They would like to know about PB Fintech. What's the right entry time to enter PB Fintech? What do you think? Are the current levels good enough?
I would suggest to avoid the stock at current levels. Now there are a few odd patterns which you look out for. One is a bearish flag formation which is happening on PB Fintech. The stock price is currently at 1775 thereabouts, and the pattern height is approximately around 150 points for the stock price, which means that there could be an impending correction of another 100 to 150 points, which could be due if in case this pattern gets completed. The breakdown point of this pattern is around 1725 mark on the spot level. So I would suggest to just wait out for maybe some more point of time. In case if the stock goes into correction, breaks this major support of 1725, you could be in for a further correction on the downside. So purely in that anticipation, I would suggest to hold and not to look at a buy at current levels.
All right, so hold call there for PB Fintech. But moving on to the next query, this is coming from Madhusudan Rao. They're writing from Hyderabad. They hold 100 shares of RVNL at a price of 170 rupees. Rajesh, do you think they should continue to hold this stock for a longer period of time, or should they exit at this juncture?
See, the railway stocks have not been performing since quite a long period of time, but I think it's time these stocks are going to perform in the next 2 quarters or so, considering the fact that the government's focus has gone back again to infrastructure building and all. And we have seen so many projects coming up. It's at this point of time, it's a hold from a side. One can try to book at around 380, 85 odd levels.
All right, so that's the view on RVNL, but that's the last query of the day. We're completely timed out on this edition of Buy Now, Sell Now. Thank you so much, Rajesh and Kunal, for joining us today and helping us with all the explanations as far as technical and fundamental views are concerned for the queries that our viewers have sent. But with that, it's a wrap on this edition of Buy